to the 2021 National Small Business Week hosted by the U.S. Small Business Administration. My name is Natalie Madeira Cofield, Assistant Administrator leading the Office of Women's Business Ownership at the SBA. Our office is missioned to empower entrepreneurially and economically women across the country, and we do so through our national network of 136 women's business centers in cities and states across the nation. We serve as the singular voice, empowering women through entrepreneurship and economic opportunity throughout the federal government. It's my pleasure today to introduce our amazing panelists that we have for an important conversation on access to capital. We know that the COVID-19 pandemic has created circumstances that have disproportionately impacted women and women entrepreneurs. This is a top of the existing challenges with access to capital that women already experienced. And in fact, in a study done by Bank of America, 42% of women said that they did not feel they had equitable access to capital. And so with that being said, I think it's important that we have this conversation to both understand the challenges that women may have, as well as ways in which you as entrepreneurs can prepare yourself and your business to obtain various forms of capital. With that being said, I'd like to introduce our panelists in name, and then after doing the introductions, we'll ask each of you to provide a bit more information about the specifics of your organization. We have today Bahiyah Robinson, CEO of VC Include. Thank you for joining us, Bahiyah. Next, we have Adrianna Samaniego, who is an investor with the Female Founders Fund. And last but not least, we have Sharon Vosmek, CEO of Astia. So why don't we start with you, Sharon? Share with us a little bit more about the work that Astia is doing around access to capital.
Natalie, thank you and the SBA for inviting me to participate in this timely and important conversation. Our work at Astia has endured for 20 years. For 20 years, we have been an organization focused, much as your organization, on giving voice to female entrepreneurs and equally giving access to networks, access to capital. 10 years ago, we launched our own investment activity under that nonprofit. And so today we are a combination of advocacy for companies that include women in a position of equity and influence, a investment platform for individuals in family office called Astia Angels, and a venture fund, Astia Venture Fund. And that fund is a $100 million fund to invest in high growth startups across sectors. We've completed our first 2 investments. And what we found, and the reason that we have investment under a nonprofit, is that this is a really sticky problem. For 20 years, less than 2% of venture capital dollars have been invested in women. And this sticky problem is more broadly existent within society, not just within venture capital. So a multi-pronged approach was needed by our organization. So we combine investment with advocacy and access, and that's what Astia is about today.
Wonderful. Thank you so much for that, Sharon. We'll move now to Adrianna. Adrianna, would you love to share more about Female Founders Fund and the work that you're doing?
Thank you so much, Natalie, and thank you for having me. So hi, everyone. My name is Adrianna Samaniego, and I'm currently an investor at Female Founders Fund. We started in 2014. We are an early stage fund based in New York City, backing the next billion-dollar businesses led by female founders. And we are agnostic, so seed stage fund, the largest seed stage fund backing female entrepreneurs. And very excited. Sharon mentioned, how timely this conversation has been and why we do the work that we're doing. But the stat of 2% has existed for decades, and we're here to move the needle to ensure that there's increased access, because we believe, again, that the next billion-dollar businesses, the next innovation that is going to move the needle, that is going to change lives, is being built by female founders. And so very excited to do the work that we're doing and to be here.
Wonderful. Thank you. And Bahiyah, last but not least, share with us a little bit more about your organization, VC Include.
Absolutely. So welcome and thank you for having me, the SBA. I'm Bahiyah Robinson, founding partner and CEO of Include Franchise and VC Include. Our mission at large is to amplify and accelerate investment into historically underrepresented and women-led asset management firms and founders at scale. And I really thought about the design of an infrastructure. What we saw that was missing in the opportunity set and the opportunity gap around investing in women and women of color is infrastructure that really allows the connection of the supply chain of capital from founder to fund manager to asset owner or asset allocator. And I spent a lot of time at the founder level, being very frustrated about the opportunities to access capital at the asset management level. And so we started to look beyond just VCs or asset managers and really at the asset allocator level and how we can create more of a smooth supply chain of capital and access, both at the founder level and at the asset manager level. So we've got a number of different initiatives and programs to help first-time fund managers that are investing in women across the nation at a rate both on the debt side and the equity side, and have a host of other partnerships and programs that we run.
Wonderful. So, I'll ask this question of all the panelists, and please feel free to chime in as you see fit. My first question is really going to be framed around what are some of the most significant challenges and barriers that women are facing around access to capital? And if you have experience with various types of capital, please do share that, right? Whether it be a traditional small business lending, moving into angel investing, and then to VC. What are you seeing, and what have you all seen throughout the course of your experiences that have remained as persistent challenges and barriers?
Well, I'll pop in because as an economist, I can never keep my mouth closed on this subject. So, I actually like to tip the question, Natalie. I always like to ask, what are the challenges VCs are experiencing that they can't fail to invest in companies that include women? If you add if you add race to gender, you actually get a disparity that there is no defensive. There is no math algorithm that one could come up with to create the dearth of funding that makes its way into women of color, most specifically, and women more broadly. And I think that when I ask the question in that way, what is venture's challenge? I come up with some interesting answers. First and foremost, it is an industry that is dominated by white men. If you look at general partners within the industry, it is 92 to 95% of the controlling GPs who actually control the assets and make the investment decision and see the upside of the investment are white male. Now, this isn't about white men being bad at investing. This is about how networks work. And every single piece of venture is layered with bias. We rely on, at the early stages, a personal dynamic between individuals, between GP and entrepreneur. And those relationships struggle to cross gender and race. Those are trust relationships, and they're more business, intimate relationships. Add to it a more broad societal challenge for businesses to invest in women, and you can see that it's exacerbated. In society, men and women are in separate business networks, and that still endures today, even in this 2021. Equally, women tend to flock together in businesses, and men tend to flock together in businesses. And this prohibits the appropriate networking that needs to happen. So if we think about this is a multi-layered challenge. Venture has its challenge in its methodology. Society has its challenge in what I'll call its norms and its societally accepted normative behaviors. And it's really because of those two combined elements that it's so sticky and so difficult, and as rightly pointed out, has endured for the full 20 years that we've been doing this work, and actually well before that.
Wonderful. That's so true. Anyone else want to respond to or add to Sharon's comments?
I think, what Sharon said is very true for VC. And then if you take that and you think of, I put my hat on when Natalie and I met, which was, I was the founder and led the procurement team and supplier diversity at Google. And if you understand, women getting credit in the US, if you understand access to loans and women-owned businesses getting loans at the same rate as our male counterparts. There's an inequity that has existed from the very beginning. And, VC, I would say, we are progressive and funding innovation, but at the same vein, we aren't, because we have not moved the needle. We really have been, I believe that this industry has been feeding into many of the mistakes that have been from the beginning of our foundation. And so whether it be access to simply information, which I think is a challenge as well, which is why, there's SBA centers, there's incubators, accelerators that have been around for a while, trying to solve that and ensure that, women-owned businesses are getting the right information. To Sharon's point, that, we have come together, whether it be, the WeBanks of the world, who are putting together, the largest women-owned businesses in conferences, networking, et cetera. But it really stems from the beginning, which I believe, us entering the workforce, us getting paid, equitably, and then all the way to credit. And then if we're starting our own business, unfortunately, we've started at a different starting point.
Bahiyah, do you have any comments on that?
I'm saying yes, yes, yes. On mute. Absolutely. I mean, I think in summary, and absolutely agree with both what Sharon and Adrianna said. We've got challenges both on the credit and equity, or credit and debt and equity side. Let me pause for a second. So we've had challenges for women accessing capital, both on the debt and equity side, and a lot of the historical barriers kind of remain. We know that, and we'll continue to say this, 2.2% of venture capital goes to women, and less than 10% of VCs are women. And so there's correlations there around, to everyone's point, the network, the access to information, and the access to those trusted networks. And trust is a tricky thing, because you think it's just you get introduced to someone and you're, on a level playing field to build that trust, but it's really about, those other connection points. But I think there's ways that women can, and I think leapfrog some of those kind of barriers to entry around people. And part of that is public-private partnership, access to capital through things like SBA women's business centers, and other ways to kind of draw down, or at least start to explore maybe non-equity types of financing. It's still a huge challenge to get to those dollars, but I think there is a sea change happening now that's just starting. It's not fully baked, but there is a understanding that women outperform in terms of fund managers, investing in high growth, high potential women. I'm sure everyone on this call, in terms of my panelists, have those stats internally, and they're outperforming the market. There's also a lot of data that shows that women businesses, full stop, regardless if you're a startup or you're just a brick and mortar businesses, they do better, right? And so they're better. Women are on par, better investors, better business builders, and better startup founders. And so I think us being able to, when I say us, I mean American citizens, seeing that opportunity and doubling down on that, this is the time to do that. And in partnership with, public policy, I think there could be incentives to really help expand these opportunities.
Thank you for that. So why don't we, take one step back, and for the woman who might be watching right now that says equity, debt, what are these things? If you all could share with us some of the different vehicles for financing and the vehicles for access to capital, and the ways in which one may pursue these different vehicles in different ways, because the way you go after VC is not the same way that you go after a microloan. There may be some similarities, but there are a lot of dissimilarities. And so I'd love to hear from you all around the entire kind of spectrum of access to capital, some of the just the experiences that you've had, and also just the understanding of what it is, so that we can better inform the audience. Does anyone want to start? And we'll go through. I have a list of those that I have on my list, and if we miss any, I'll make sure to add to the end of the conversation. Sharon, did you want to start? You look like you wanted to start.
I didn't want to start. I was going to be gracious and allow others, but I'll start with venture capital because, I mentioned I'm an economist. I have a graduate degree, and I actually didn't learn about VC until after graduate school. So I want to be really clear that I think that's a part of the market that I want to see more women participating in, just because it's not as visible to women, and not as visible to women, not as visible to entrepreneurs broadly. So let's talk about venture capital. So venture capital is for businesses that are going to scale and are going to create what I call real world solutions, and therefore need a lot of capital so that they can address their market and they can really take on the challenges that, quite honestly, today's world demands. I wouldn't say all VCs invest in that type of company, but that's what they should be. So the notion of venture capital was to provide capital to companies in the form of equity. So the investor takes actually a position in your company and partners with you. So providing more than capital, because they're also owners in the business with you, providing access to networks that can really help the company succeed, expertise, because high growth or companies that grow quickly and address large markets require unique skill sets and unique networks. And for me, when I learned about venture capital, what I was very excited about and why I became involved in it was because the numbers are so appalling as it relates to women. But where women have participated, they have outperformed. And so I like places where women can really have a substantial impact. And the way that I see their impact is actually twofold. One is that investor performance, which is rightly being highlighted. But equally, women tend to start real world solutions. And we'll get more to this when we talk about the impact of the pandemic on, for example, our portfolio of companies. But as I look broadly at our work in the last 20 years, it is notable that the companies that we've worked with, if you do an impact overlay, they tend to be solving for feeding a hungry planet, health and wellness, education, financial inclusion, and other what I'll call democratic values of bringing people into markets. And this is not just because they're women, this is because of the experience of women within society. And so I like to highlight venture capital because it's a place where women can think big. They can think about addressing large markets for the solutions that they see are appropriate for the market. Now, raising venture capital is not easy, and not every business is right for it. But I like to highlight it because it's often a hidden gem within the economy, and it drives job creation. All net new jobs in the last 30 years, according to the Kaufman Foundation, have been created by venture-backed startups. It's wealth creation. For women, this matters. We don't have just a pay gap. We have an equity gap. And venture capital is the fastest path to resolving that because you as an owner in your business see the upside. And then the third and final one is it's the fastest path to the C-suite. I've kind of given up an industry to solve for women on boards and in the C-suite. Entrepreneurship is the fastest path. Start your business, be part of that core team. And you don't have to be the only one. Bring in others with you, but stay in that C-suite and be an executive driving the business. So it's why I highlight venture capital. I just think it's a phenomenal innovator for transforming economies and bringing women into economies on par with their male counterparts.
Sharon, I'm going to ask you a follow-up question, and then on deck, I'd love someone to share about angel investors so we can get a better definition of that and how one pursues. So you mentioned that not everyone has a business that is the type of business for a VC. What are the type of businesses that VCs are looking to invest in?
Well, I actually really like answering this question because most VCs will start with the return, what the return needs to be. But I'm going to tell you what I need as a GP in a venture fund. I need a real world impact. I'm looking for real world solutions. If you look at my portfolio, I tend to have those things that I was highlighting, which is, are you solving for the planet's current needs? Is it a climate solver? Is it a feeding the planet? Is it a health and wellness play? So starting there, it must be big world problems, big world solutions. But the truth is, for most VCs, it's all about returns. And so it is that you're going to grow to a scale where the company can ultimately either be acquired by a larger company or succeed on its own right and become a public company, or if it stays private, it generates enough revenue that the investor can see a return. That return expectation varies depending on where you sit in their portfolio, anywhere from a 2x to a 10x and beyond. What I would say is that as VCs and as the legacy of venture has endured for the last 30 years, that return variable is not it's not a direct calculation. It really does vary. So you, the entrepreneur, you entrepreneurs who are listening, should have that discussion with your investor to understand what is the return profile that they're looking for and what are the solutions they're seeking. Some funds only invest in specific types of businesses, software as a service, clean energy, hardware and infrastructure. But knowing what the fund specifically invests in, what their return profile is, and then I think of equal importance, how well they align with you, the entrepreneur. I'm going to highlight that as a VC, I believe advocacy has to go alongside my investments, especially for women CEOs. And if she's a woman of color, I'm going to be a fierce advocate for her as I sit on the board and I continue to invest in her business. And you as entrepreneurs should look for investors who are committed to that kind of advocacy on your behalf as part of the investment platform.
Wonderful. Thank you, Sharon. Anyone want to talk about the other form of equity, which would be angel investment?
I was going to jump in and talk about just other types of
Sure.
investment, but please, Adrianna, maybe we.
Yeah, we can. Happy to take angel investing. So I think, what Sharon discussed is institutional venture funding, which is the largest portion if you look at venture capital. But in the last decade, there's been angel investors have always existed, but even there's a couple of ways. I think historically, when I used to think of angel investors, because regulation and what they deemed as an accredited investor was you had to have, high net worth, either I think it was $200,000 in annual income, and if you're with a spouse, then it changed, or $1 million in assets, in liquid assets. Now that's since changed, and now there's crowdfunding that exists. There's platforms like Republic and others where you can buy a piece, which is what Sharon discussed, which is equity. I'm going to give you $10 and you're going to give me X percentage into your company, a stake in your company. And so an angel investor can exist in a couple of ways, but it's somebody who is hopefully a strategic investor, meaning they are in this industry. Perhaps they ran a business before, or they're looking to diversify their assets or their investments. They're looking to diversify their investments. And so a lot of people will have exposure into the public markets, and many people are looking to get exposure into, I would say, these early stage pre-IPO non-public companies. And that's where angel investors come in. And it's really, I would say, the most common vehicle is through what they call a SAFE, or a convertible note, at the earliest stage. So a SAFE is just a simple agreement for equity, or a convertible note, and it's saying, I'm going to give you $10,000 for X percentage, depending on where the company is valued. You can do that directly, meaning I have a relationship with a founder, I build that relationship. A lot of them start consulting or just working, or maybe somebody in your friend group, and it's a friends and family round that usually happens before that institutional round, before you come to Female Founders Fund, before you come to Astia. You raise a friends and family round, or maybe you crowdfund. And that's where a lot of angel investors will play, and or you find these opportunities through these crowdfunding platforms like Republic.
Wonderful. Thank you.
I want to highlight something about angels that's unique for women.
Sure.
If you look at the percentage of angel dollars that are invested in companies that include women leaders, it outperforms venture time and again. So as we're talking specifically to women entrepreneurs, know that individuals who can invest in your business are a powerful differentiator for you in a way that venture is not. What is really exciting too about angels is so many people can become angels. So entrepreneurs should not be afraid to ask people they know to invest in their business. Men, interestingly, statistically, are much better at this in saying, I've got this amazing business, come invest in me. And I really encourage entrepreneurs to be bold and at the playground when your kids are playing with your next door neighbor, talk about your business and dare to ask for investment. It's a great opportunity. So I just had to highlight that for women, there's a great opportunity there, especially family offices and high net worth individuals really get this, and they really get the power of women as an investment opportunity.
Love it.
I'd actually, one more thing about angel investors, just for those female founders listening on this call, which is, try to ensure that they are nice if they're accredited. And then for those either angel investors or future investors, investing in a startup is extremely risky. And so it is very different than any other type of vehicle that you perhaps have exposure to. And so just ensure that you're doing your homework, that you're talking to people, that you're willing to take on that risk. Oftentimes when we're investing, we're looking at, a time frame from 5 to 10 years to be able to see that return anything. And so just be mindful as an angel investor, what you're doing. And then on your end as a founder, just be very strategic and also be mindful and thoughtful who you're including on your cap table, because this is a long-term partnership and you want, these individuals to be invested with their money and their time.
And cap table is capitalization table, the
Yes.
capital that you're getting in your business. Great. Thank you. Bahiyah, you wanted to add something to this piece. You're going to be adding it from the perspective of equity, or are we going to move into another form of capital?
I was going to actually just take a step back for entrepreneurs that might be, watching this, that might be just either pivoting or trying to start a new business. And they're really at kind of the, ground zero of kind of, I see a market opportunity or something that I have, I excel in, right, that I can create a business around. And I'm really at this point trying to both create a business plan, really at that point of what type of capital should I be looking for? And I think that's one question that a lot of entrepreneurs, but also women entrepreneurs, spend a lot of time in the hashing out, what exactly am I doing? And I think one of the things that you have to marry with that is what type of capital and kind of exit strategy do I want to see? And I think these are important exercises at the very beginning. And even if that changes as you start to build that business, it gives you a level set of, you've got a 3 to 5 year plan based on a market opportunity you see. Even if let's just say you're a brick and mortar, maybe you're not yet, that you have to become technologically enabled because every business will have to, right, at some point, but you have more of a kind of either a brick and mortar or just a small business that you don't know if it's going to scale, right? Because we start using these terms in VC of, is it a $1 billion company, or is it, sellable or scalable? And then I think women, we were like, we don't know, right? And so I think taking a step back and being very thoughtful about not just the planning piece, but also going into the market and making sure that if there's access to debt capital, or even loans, whether they're, zero interest. I mean, I think staying away from anything that looks or feels predatory is really important, not being in such a, in a state where you just need any money. I think one of the core things within our conversation is that not all money is good money. I know we're talking about access to capital, but we do want to be, good stewards of capital, which we historically are as women, and really find the right capital that meets the moment of where we are in the growth of our business at that time. So if you are a tech expert that has been in this digital, a digital native, and you're building a platform, you know that you're building something that can scale kind of from day zero, then you want to be starting to connect with, accelerators, incubators, and investors that are experts in either your particular industry and or that fit the model of the type of capital you're looking for, because you don't want to go to an investor that invests in some other type of asset class. It's not venture capital. You're putting them on the spot to say, invest in me. And they're like, we don't even invest in that. So, doing a little bit of, with your preparation piece, matching what type of capital is available. That means I'd say 3 things to do off the top of your head. One is go to either your local bank, either the bank that you just use as your checking account, savings account, and start to develop relationships with those bankers and ask them about the type of access to capital, both from a debt perspective and credit, as well as potentially equity, because there are a lot of financial institutions that are starting to launch programs that do provide other types of capital. Ask them. And if that bank that you have, maybe it's a local bank, a small bank, or a credit union, doesn't have those type of programs, start to look for those that do. I would do a massive research around, what type of, again, capital that you need first for the business at the stage that you're in now, mapping out what type of capital you'll need down the line so you can start to create that network effect. We are absolutely all right and on the same page when we say it is about networks and having people that have both access to the resources, both financial and non-financial, to help you kind of grow through the life cycle of your companies with enough capital so that you can be I hesitate saying a fast growing company, because I don't think every company is fast growing, again, or needs kind of venture capital, but a company that continues to grow and provide jobs for the community and provide other value add in ways that, again, the venture capital model sometimes does not allow for. So just looking at it from the ground level, I thought it was important to kind of add that piece.
Absolutely. And we'll pivot into the next set of questions, but I want to add a couple of pieces here. So nearly 99.9% of all U.S. small businesses do not receive venture capital, right? And so it's not even taking a step back, it's taking a step over. And it's just looking at our peer entrepreneurs that are in spaces and building businesses that could be raising capital through everything from government contracting as a form of access to capital to traditional debt-based capital, which we've talked about as well. And for those who are watching and listening, if you hear the words equity and you hear debt, when you think about the equity perspective, just think you're giving a piece of your company to someone, a percentage of the company. That is how they make money on their money investment to you. On the debt side, you are not giving a piece of your company, but you're paying for the life of the amount of money that they've given to you. And that is how they make money off of having given you money in that instance. But money will be made on either side of those pendulums, right? And so the way in which that money is made is also predicated on the type of business that you have, as well as the type of financing that you seek. From the debt perspective, I want to raise a few things up that I think are important, particularly for the SBA. Many women go to their community development financial institutions, for which the SBA is a major partner. And in fact, nearly $30 billion worth of funds are distributed through our national network of more than 5,000 banks that we have across the country to support entrepreneurs in Main Streets and on the Silicon Valley street, so to say, across the country. And so I just want to raise up our CDFI network and raise up our CDFI community, which is very important. Women are also starting businesses because of traditional lending capital that has been made available to them, which also has, in some instances, elements of programs that SBA has, from our 7(a) program, our 504 loan program. These are government-backed financing opportunities that support the growth, again, of women-led businesses and businesses in general across the country. And then lastly, we look at the ways in which we personally finance ourselves. And that's credit card based debt or line of credits that we may take out on our person or may take out on behalf of our business as a way to begin the process of financially investing in and building the financial reserves for an organization. And then other forms of lines of credit could also include home equity lines of credit, where we have seen, particularly in this housing market boom, where the housing values have escalated, people have then taken home equity lines of credit and then also use their personal capital. In all of these instances, it is important to be aware, informed, and diligent on every step, right? You don't want to take a home equity line of credit out on a home that's value may decrease, just as much as you don't want to take investment from a VC that is not interested in your industry and really does not care about you as an entrepreneur. So all money, to the point that our panelists made, is not good money, and you need to be wise about the asset of your business and the asset of yourself. With that being said, I want to move with the last bit of time that we have today to talk about the ways in which you all feel that the pandemic has impacted women-led businesses, and what opportunities do you think have arisen as a result of the way in which COVID-19 has changed how we live?
I can jump in here and just say, from our perspective, both from the founder level and the asset manager level, it's been very interesting in a few ways. One, we know that entrepreneurs and small businesses have been the hardest hit, and particularly women-led businesses and women, and even more so than any, women of color-led and Black women-led businesses have been, decimated. And so it's really heavy on my heart. That's the stats of the 60 and 70+% of businesses that have been affected by COVID-19 pandemic. I'd say on the other hand, though, there's a lot of growth. And I think because the stock market has just taken this wild ride up, there are, folks that have been lucky enough to, increase their net worth through kind of stock market investment. And so there's a lot of professionals that we're seeing on the retail side, meaning, through crowdfunding and other mechanisms, which the government, gratefully has made available. It's not just a $200,000 check and $1 million in liquid capital. You're like, okay, how does that work? But they're able to then invest in smaller chunks in small businesses across the nation, not just in the coasts, but also in rural areas and others that might not reach venture capital dollars or other types of capital. And so I think there's an opportunity here. We want to try to stay on the positive side where there's been a downturn in terms of, a lot of businesses going under, but then there's an opportunity for them to come back. And, I think one of the terms is build back better, but to really kind of start to pivot, which is why I think this is a great time to look at your business, the business you've, started, you're pivoting, or that you're trying to grow again, and really look at what's the right pathway in terms of access to capital, because there's a unique opportunity to really access those points of capital in a lot of different ways. And if you are prudent about and know about all of the types of capital that's available to your business, you might be able to plot out in a much better way than generations past, being able to use that capital to grow.
Wonderful. Thank you. Anyone else want to add to this question?
Yeah, I think so. With COVID-19, as it relates to venture funding this past year, we actually took a step back, unfortunately. So there was a decline in the dollars that female founders received. And so when you pair that stat and the fact that, what Sharon mentioned earlier, which is female founders are exiting their business at higher multiples faster than the counterparts or than the market. And so trying to understand, what is the delta and what's happening there. And if you look at the fact that female founders are also many of them are mothers, and we're having to take care of their children for the first time while running their business, while having board meetings. And my hats go off to them, because they, this past year for all of us, or year and a half, is extremely challenging for a lot of reasons. But at the end of the day, they outperformed. And I think that is what we need to pay attention to. And I think the fact that there are more GPs now that have been funded, new like first-time fund managers that are female founders, that are women of color, that are receiving funding, I think has been phenomenal. And then there are new accelerators and incubators like Visible Hands that are starting at the earlier stages, supporting underrepresented founders. And so I think the last year and a half has been extremely challenging, but there's been a lot of opportunities and just new either funding or support systems that are in place.
Wonderful. Sharon?
Yeah, so I kind of think about the pandemic in two ways. One is, let's just talk about the pandemic, that there was a global pandemic and suddenly we needed solutions in the form of diagnostics and treatments. And what I was struck by is how many, we currently have 65 companies in our portfolio, how many of them became what I'll call newly relevant to the market. they were relevant already. They were already solving big world problems, but the pandemic came along and they moved into action. One of them is Hawthorne Effect, an amazing entrepreneur that is basically a solution for clinical trials, and it's a remote solution, so you don't have to get back to the primary clinic. You can have your test follow-ups in your home. Well, what she did was immediately deployed a network of care providers that could help with diagnosing or sending out test kits for COVID. And, I have company after company like that just pivoted into what I'll call a very relevant space. They were already a very relevant solution. And I think this is true for companies that solve real world problems. When real world challenges arise, they don't become less relevant. They become more relevant. And that's what I see with our portfolio of companies as it relates to a pandemic. The second piece of this is the economic component of the crisis. And having lived through the 2007-2008 crisis, and now this one, and before that, the dot-com bubble, it is my observation that when we see a financial crisis, venture retracts on its investment into the non-white male category. And we saw that, and it was pretty classic. But this time we actually saw something else that was very important and very pronounced. And this is for entrepreneurs to learn from. VCs advised their portfolios to get very conservative and to behave thoughtfully. Interestingly, the majority of male entrepreneurs did not take that advice, and they leaned hard into the economic opportunity that a crisis presents. The women within the portfolio listened to the instruction, pulled back marketing spend, pulled back customer engagement so that they could weather the storm. And this lesson has to do with us socially. As young women, we are socialized to follow rules, to be pleasers, and to really conform to expert guidance. And this can be good, but this is a case where it can be bad. Sally Krawcheck talks about this. There's a great bit of research that actually was done during this financial crisis. And unfortunately, too many women in business followed this hunker down advice. And if they had stayed true to their entrepreneurial spirit and leaned hard into the economic crisis that was, the strongest businesses come out of economic crisis. Venture has always outperformed in its investments that go in economic crisis. I just share this because as entrepreneurs, you should surround yourself with expertise and surround yourself with advisors. But you should listen to many perspectives and many thoughts and not just single guidance, especially of your investors, in my opinion. And you should especially listen to other entrepreneurs and your customers, because the best source of capital is actually a customer. That customer transaction is the best validation of your business, and it's the best thing to grow on. And certainly out of this last year, what I've observed is that women who were engaged with their customers in their businesses have done phenomenally well. And we're really proud of our portfolio as examples. We don't have a single shutdown from the pandemic. And I don't think it's just because we picked really good companies. I think it's inclusive teams continue to outperform for investors, and they continue to be more resilient and have more robust solutions for the market that can survive crises like this.
Wonderful. Sharon, that was a great way to close our conversation today. This was an amazing dialogue with Bahiyah, Adrianna, and Sharon, who have joined us as leaders in the industry around access to capital. Sharon just mentioned equity. We have heard from Adrianna and Bahiyah both about equity and empowerment, both from a gender and an ethnic perspective. And I want to just share a few things that are happening in this administration around those very targeted areas. On his first day in office, President Joe Biden signed an executive order on equity, which has challenged all of our federal agencies to review and evaluate the ways in which our programs and services are reaching you, the American public. It is my pleasure and honor to serve as the chair of this work on behalf of the Small Business Administration. Additionally, the president also reinstituted a new Gender Policy Council, which is designed to look at all of the ways in which women are or are not integrated into the fabric of both the federal government as well as the programmatic components of what the federal government has to offer. And I also serve as the senior designee for this particular council for the Small Business Administration. With that being said, I would like to just share that the intersectional nature is something that also does not fall by the wayside when it comes to the Small Business Administration, and we understand the challenges, predicaments of all the communities we serve, whether it be the intersectional nature of race and gender, the intersectional nature of rural and gender, the intersectional nature of urban and gender. And we are doing all that we can to ensure that we have our Women's Business Center networks, which are expanding by the day, to reach more communities across the country and throughout the territories for which the United States of America is engaged. And in fact, we recently just put forward an opportunity for the island of Puerto Rico to establish 2 new women's business centers. With that being said, we invite you to stay connected to the Office of Women's Business Ownership, the singular voice of women entrepreneurs in the federal government, and to stay connected to the panelists that you've heard from today. And we'll see you at next time during another conversation and during National Small Business Week. Thank you to all who joined us, and thank you to our panelists.